This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome, everybody, to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 148. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. Now, quick reminder from last week, we announced our next virtual event, the SNN Network Canada virtual event, which will be taking place January 6 and 7, 2021, with lead sponsor Small Cap Discoveries, one of the leading Canadian small, micro, and nano cap newsletters. We've teamed up to highlight our neighbors to the north, Canada. We have our initial speakers up there right now, so be sure to check them out. Many more speakers will be announced, and the presenting company lineup is already filling up quickly. So I'm really pumped on what we have lined up for you all. And be sure to register now on canada.snn.network to join us for this incredible microcap event to kick off 2021. Again, go to canada.snn.network. This week from the SNN Podcast Network, we have the following shows coming up. Starting with In the Market Trenches with Gary Reeby and Eric Fiore. They discuss the value versus growth trade, reflation, and much more. They go through the various scenarios and what's been happening in the markets post-election and post-vaccine news. So check out this episode on Apple, Spotify, YouTube, or Podbean at inthemarkettrenches.podbean.com. We have a solid show on tap for the Investors Roundtable as well. This week's topic is understanding healthcare and life sciences. With the recent clinical trials results from Pfizer and Moderna on COVID vaccines, I thought this would be a great opportunity to chat about how to evaluate this sector. You can watch this episode on the SNN Network YouTube channel at www.youtube.com/SNNWire. Now, for this episode of the Planet MicroCap podcast, I spoke with Shree Viswanathan. He is the founder and CIO of SVN Capital. With a long-term investment horizon, SVN Capital constructs a concentrated global value equity portfolio designed to achieve capital appreciation by minimizing risk and avoiding permanent loss of capital, according to the company's website. Shree is truly passionate about investing, and it was a pleasure learning more about his investing philosophy and criteria. Thank you again for tuning into episode 148 of the Planet MicroCap podcast, and please enjoy my interview with Shree Viswanathan. Back, everybody, to the Planet MicroCap podcast. I'm your host, Robert Kraft, and I'm very excited to share with you our guest that we have today. It is Shree Viswanathan. He is from SVN Capital, part of the family over at Willow Oak Asset Management, and we're very excited to have him on today. So, Shree, with that, thank you for joining me today. How are you doing?
Fantastic. Thanks a lot for having me. I'm excited to be here and speaking with you. Appreciate it.
No, absolutely. I'm excited to learn a little bit more about your story in SVN and also how you became a San Francisco Giants fan. We're going to have to talk about that. But in all seriousness, let's start with your background. All right. So where did your passion for investing begin?
Sure. I always try and kind of connect three dots, one from the past to the present, and possibly talking a little bit about the future as well. So this question is about the past. So I'm originally from India, from the southern part of India. Came here as a graduate student in accounting, and pursued that. In the mid-90s, I was working for an insurance company in Des Moines, Iowa. And that's when I sort of realized I had this immediate urge to pursue a slightly different path going towards corporate finance. What happened there was in August of 1995, my cube was right next to the investment team's cube, and they were talking a lot about one Mr. Warren Buffett who had bought this Geico, the big insurance company. And, Des Moines is about 3-hour drive from Omaha. A lot of people were going back and forth. The investor day. I didn't know anything about all these things until that particular day when this big announcement came. And something in me started, churning, and I started thinking about corporate finance. So decided to go to B school. I'd already finished my master's, decided to go to B school and get an MBA. I went to the University of Chicago, a city that I was somewhat familiar with, obviously the school that I was a lot more familiar with. So decided to go there, and I actually became an investment banker, doing M&A in the financial services area, first at Alex Brown, when that was a standalone investment bank in Baltimore. And then because Alex Brown went through a couple of changes, it was acquired by Bankers Trust, which in turn was acquired by Deutsche Bank. There were some serious turnover within the Baltimore office. The head of M&A at Alex Brown moved over to Thomas Weisel in San Francisco to set up the mergers and acquisitions team within Thomas Weisel. He picked up 5-6 of us to go with him. I made the cross-continent move to go there. And that's the reason why you see that San Francisco Giants flag behind me. My kids, both kids are big fans of San Francisco.
It's very important. I'm glad you connected the dots there. That was the most important thing that I needed to understand.
So, I was a banker, and a banker's life is treacherous, and decided to move over to being a principal advisor as opposed to an agent, doing mergers and acquisitions for a bank in San Francisco, Union Bank of California. Did that for a few years, and then I had an opportunity to come to Chicago to set up a small hedge fund focused on financial services. So, soon after that, I joined advisory research, where I spent about 10 years. Much of what I know about investing, value investing, long-term thinking, and all of that comes from late Mr. David Heller, the founder of advisory research, who took me under his wing. And that's where I spent a big chunk of my time. We'll go into more of the details as to some of my past and my learnings and all that, I'm sure, as we go along in this discussion. So that's where I started. And a couple of years ago, I set up SVN Capital, bringing a bunch of my capital markets experience, my intense desire to continue to learn and sort of put that to work. SVN Capital today is a concentrated, global, long-only portfolio with the objective of doubling capital over a business cycle. We'll come back to that later, I'm sure, but that's where I am today.
Very good. So when you're doing capital finance and really as an investment banker, I mean, did you find yourself so many times just like, I just want to build my own portfolio and build my own book and just pick my own stocks right now? I mean, I'm sure that went through your mind constantly.
Absolutely. As I said, I'm originally from the southern part of the country. My maternal grandfather back in India, he graduated from high school, and that's all he was able to go through. But then he was one of the most successful entrepreneurs in the family, moved over to what is today called as Mumbai, which is the commercial capital of the country, and set up his pharmaceutical operation. It was very successful. I'm sure part of that desire to go on my own is a sort of a strand of gene from that pool. But to answer your specific question, when you're sitting in front, I was an associate both at Alex Brown and at Thomas Weisel during those booming deal times, we were handling somewhere between 3 to 6 deals at a time. And when I say the banker's life is treacherous, it's only slightly better than the legal profession. But when you're sitting in front of your computer adjusting business models at 3:30 in the morning, you definitely become a philosopher. I went through that process, learned a lot through that process. It taught me a lot about finance, taught me a lot about how boardroom discussions ensue, how decisions are made with respect to capital, and many other facets with respect to capital markets. But truly speaking, looking back, every single organization that I've been part of post my MBA was acquired either while I was there or soon after I left. And in 2010, Advisory Research was acquired by Piper Jaffray, the investment bank out of Minneapolis. That's exactly when I knew I wanted to manage money on my own. I always had this intense interest to invest and manage money. I was already managing it on that platform, on a couple of different platforms. But to be very specific, 2010 is when I, decided I'm sure I'm going to manage money on my own terms.
Got it. All right. So, so really throughout this whole time, you had your own portfolio of stocks that you were managing on your own. So it's not like you were doing all this and then decided, okay, now I'm doing this on my own and we're managing money and that's happening. So you're doing it the whole time.
Right. So as a banker and as a M&A executive, it was very specific project oriented. But as a portfolio manager, managing financial services portfolio, or even after that as a generalist, I've been managing money for the last 15 years on a couple of different platforms. And this is sort of an extension of those types of experiences, except the style and the approach is quite a bit different.
Got it. All right. So all this then led to your founding of SVN Capital. So exactly when did you found that, and what was some of your reasonings for setting it up the way you did?
Yeah. So this was late 2018 is when I set up SVN Capital. There are a couple of different avenues within SVN Capital. I started off in 2018 with separately managed structure, and January of this year I set up a partnership structure as well. Exactly same set of securities, same approach. It's just that it's in a partnership platform. So why did I, what are the basic tenets, and how did I set up SVN Capital? I'd say there are, primarily 3 different tenets. Number 1 is concentration. Number 2 is long time horizon. I'll come back to each one of them with a little bit more detail. And number 3 is global. So why are those 3 important? If you actually go back and look at people generally use S&P as the proxy for market. If we go back in time and look at the market, it's generally been about 8.5% to 9%, depending upon when you start in terms of annual return. There was years ago there was this big philosopher and a good writer, Zig Ziglar. He actually said, if you do not have an objective, you will hit it every time. And so I set it up with an objective of doing something better than the market. And what does that mean? Well, business cycle, and notwithstanding what we went through up until March of this year with this most recent cycle, has been typically about 5 to 7 years. So my objective has been to sort of do much better than the market, but over a long time horizon. I'll come back to that. That time horizon is about 5 to 7 years. And doubling capital within 5 to 7 years in quantitative terms, it translates into 10 to 15% per year. Obviously not in a linear fashion. That's the objective. So, why is that important? Why is concentration important? Um, Concentration by itself doesn't necessarily guarantee positive or great returns, but I sincerely believe that excessive diversification most likely will lead to mediocre performance. Just I'm a one-man investment committee, and I would like to keep it that way. There is, structural and physical limitation in how many businesses, how many business models an individual can continue to monitor and perform. That's one, but it is also true that based on evidence from a long history of other managers, you just need a handful of businesses to create true wealth, and that's a big positive. And so the approach is to keep it as a fairly concentrated portfolio, allowing me to kind of perform over a long stretch of time. And that long time horizon is the second tenet. To hit my objective, I'm looking for certain specific tools. One of them is this power of compounding. Allow me to digress for a quick second. If we actually take a penny from a penny and then double it every day. So if it was a penny yesterday, it's 2 today, 4 tomorrow, 8, 16. By the 30th day, take a wild guess as to what that becomes. You probably already know the answer.
I wish I did. I was trying to do it quickly in my head just now. So what, like, okay. I would say $10. Close.
Pretty close. It's actually $10.7 million. That's the power of compounding. And it's not just the power of
that's what I meant. I meant I meant $10.
Yes.
That was it. It was short. It's like, when you look at a financial statement, it's like $10 in millions. It was in parentheses. Million. Yeah. Okay. All right. Okay.
Yeah.
Good.
Millions was within parentheses.
In the parentheses. Yeah.
Whatever.
Yeah.
So absolutely. So you're close enough. But the punchline is, what is it on the 29th day? It's actually half of that, right? If I round up the numbers, it's $5.4 million. So penny becomes on the 29th day, becomes 5.4. So the reason why I say that is this power of compounding. If you allow it to kind of perform over a long stretch of time, it's an enormous power. But also, it is back end heavy. My undergrad was in math and physics, and if you were to sort of draw this on a chart, it will be what is called as an asymptotic curve, kind of takes off as time progresses. So that's an important feature that I'm looking for, because the objective is somewhat steep. And given my immigrant approach, probably because of that, I do think while U.S. capital markets is still the deepest and the most transparent and a lot more opportunities and all that, I do think there are very attractive opportunities outside the U.S. as well. And so it's a global platform. When I say global and outside the U.S., I'd like to sort of clarify it by saying, I'm a CPA. I understand the language of business in terms of financials. And so I would like the financials to be following one of two languages, either US GAAP or IFRS, International Financial Reporting Standards. There are a lot of similarities between the two, but there are differences, particularly when it comes to real estate, stuff like that. So I would like it to be either one of those two, but there are 140 countries that follow IFRS. So I try to sort of funnel down my opportunity by overlaying a couple more constraints. Corporate governance in the local market needs to be something comparable to what I can appreciate, most likely to the Western world. And number two, the financials, the entire filings need to be in English, even though Google Translate kind of offers a lot of different opportunities. I don't want to be spending time translating stuff into English. So That all funnels down the opportunity set to a manageable few countries, not leading me out to, say, Uganda or Nigeria. Nothing wrong with those, but I just don't want to be exposed to those types of markets. So those are the three primary constraints, and that's how I set it up. And,
Got it. Oh, sorry.
Yep. Go
No,
ahead.
you're gonna no. What were you gonna say?
No, I was just going to say currently there are 12 securities in the portfolio, and 8 of them trade here. They just trade here in the United States. The rest, 3 of them are invested in Europe. 1 is in Eastern Europe. So it's an eclectic mix of different types of businesses. Not exposed to Asia at this point, but looking at a few.
Very good. All right. So then when you're looking at a potential new investment, what's some of your criteria going in? You have your universe of stocks, you got your compounders, you have your special situations, but then within those two frameworks, what company that interests you the most?
Yeah. So it's a very important question. And the way I try to think about this is I sort of think about it as a sandbox with 4 corners, and each corner representing a sort of a security question that needs to be answered affirmatively before a business can get into the sandbox. And I'll go through that in a second. But that sandbox, I consider that to be a dynamic system. And as you know, any dynamic system, if there are more moving parts, there's a higher likelihood of things going wrong. And so this dynamic system, I want it to be not quite static, but at the same time, not have too many moving parts, meaning not too many buys and sells and trades within that sandbox. So I do a lot of work up front trying to, make sure that all 4 questions get answered affirmatively. So what are they? Number 1, and they go in this same sequence. Number 1 is it a business that I can understand? The famous circle of competence question. It's a famous circle of competence question, but I'm sure what is attractive to me need not necessarily be attractive to you or to somebody else. So I sort of know where my strengths are, and I try to remain within it. So I kind of keep away from businesses that either have a poor record of industries and businesses that have a poor record of performance, and businesses that I don't understand. When Michelangelo was asked the question as to how he created David, he said, "Well, I actually didn't create David. I just removed all the unwanted pieces from the marble, and what remained was David." And that's a fantastic framework to kind of keep in mind, particularly given my approach. My approach is to have a long-term, concentrated, not too many buys and sells kind of a portfolio. So in that process, I kind of keep away from pure energy exploration production companies, mining companies, Bitcoin, biotech, and even retail. Even though it's a relatively easy business to understand on paper, I kind of stay away from those types of businesses. So that's number 1. That's corner number 1. Corner number 2 is the quality of the business. That's very important in terms of trying to understand various facets of this word quality. I spend a lot of time trying to parse out the details from the financials, a little bit more time on cash flow statement, balance sheet, slightly less time on income statement in that order. But in that, what I'm trying to understand is, what are So, for example, if I take the income statement, gross margin is a lot more important for me to sort of understand and appreciate the quality of the business. Historically speaking, gross margin remains kind of relatively stable as opposed to net margin or operating margin. And so understanding the gross margin component sort of helps me think about the income statement part of the business. On the cash flow, I'm looking for free cash flow. On the balance sheet, I'm looking for businesses with less to no debt. All that with the mindset of eventually getting a historical context, at least 10 plus years of historical context for return generation. It's not just if I'm looking to overall portfolio performance, if I'm looking for 15% plus return, the underlying businesses need to be generating that. So I'm looking for that healthy kind of return. But on top of it, I'm also looking for businesses that can reinvest. So that's an important aspect of how that quality of the business analysis kind of goes on. So that's number two. Number three is obviously the business that generates this kind of quality needs to be managed by a quality management team. And I spend a lot of time trying to understand the quality of the management team, read the proxies, read the annual letters, understand the competitors, understand their view of, this particular portfolio company or this particular company that I'm trying to understand. Eventually, I'm looking for good ownership interest from the management team, looking for good incentive program, good compensation structure, well aligned. All that is quantitatively defined in the proxy. But I'm also trying to sort of understand the quality of decision making. Particularly when you go back in time, you're able to see what they said 5, 6, 7 years ago and how they have performed. And so all that gives me some confidence about thinking about the future. So that's the quality of the management team. And then finally, the fourth corner is valuation. And there I'm looking to pay a reasonable price. Obviously, nobody wants to overpay. Looking to pay a reasonable price for a kind of a business that generates this kind of return, managed well by, teams with skin in the game and good, well-aligned structures. So those are the types of questions that need to get answered. And I sort of keep a very open mind in terms of size of businesses. I understand the name of your podcast itself is Planet MicroCap. I do have a couple of microcaps, but size is not necessarily a constraint for me. And as I said earlier on, global and any size is kind of the approach I take.
I don't know if you've thought about this, but like of the four pillars, the four corners that you mentioned when it comes to your investment criteria, do you have a ranking? What do you have one that's more important than the other that you give me? Like, this valuation, it's really good, but I don't know about management. What's that give and take there?
Yeah. Life is all about compromise, man. It's
Sure.
all about compromise. And I wish I can get all four of them checkmarked perfectly on every single name.
Not a perfect square. Sometimes it's that rhombus. You got some things are a little obtuse. Maybe it's a little acute.
Yep.
There we go.
Absolutely.
That was good geometry.
So, obviously, if I'm answering this question, number one question has to be still affirmatively answered, meaning it's a business that I can understand. And so it becomes a kind of a tug of war between the remaining three questions: quality of the business, quality of the management team, and valuation. And so I sort of rely on Charlie Munger's statement about if you actually, irrespective of what you pay for a business, if the business is generating 20+% return, and if you stay there for a long enough period of time, your return is going to be the return of the business. And conversely, even if you are able to pick up a business at a very cheap multiple for a business that is not quite that high quality in terms of either returns or quality in terms of management team, your eventual return, if you stay there long enough, is going to be the return of the business. So that's the approach I take. And so the reordering would be still question number 2 and 3. And that's where I find myself spending most of my time anyways.
So you mentioned that, you're a concentrated investor. You do very, very rare. I mean, it's not very rare, but you don't do too many actual trading of buying and selling out of your positions. So then I have to ask, what is the investment process? You find a company that you either like, or you find a company that you have in your portfolio. They're like, okay, this isn't working out. What's your buy and sell process?
Yeah. So, the process starts with answering these questions that I just listed, and then it becomes an evaluation relative to names in the portfolio. Now, fortunately, there are only 12 names at this point, and I am working on a couple of them. So if I were to use that example, it then becomes a question of, what does it, I definitely will not go past 15 names, but I'd most likely stay closer to the 10 as opposed to the 15. But as I'm thinking about adding a particular business to the portfolio, it has to beat the bottom performing name within the portfolio. Most likely in terms of returns, in terms of valuation and quality of management team. So it's a constant evaluation. Things move around. So to be very specific, for example, I've spent a lot of time within financials. I bought and sold a bunch of banks and insurance companies for Union Bank of California, managed the financial services hedge fund before I joined advisory. And even within advisory research, I did spend a little bit of time relative to others within financials. So understanding banks, insurance companies, real estate trusts, they were, it's a good bit of time that I've spent there. And as I launched SVN Capital, and I'll go back to 2018, for example, interest rates were poised to go up. In fact, Federal Reserve was making a lot of public announcements about how rates were going to go up. Everything flipped, of course, in 2019 and has been going down. And this year we've had COVID, which has taken rates even further down. Now, I bring that up only because early on, I did have a few more rate-sensitive financial services businesses. And at this point, I have just one insurance company within the portfolio, which is rate sensitive somewhat. It's got group, health and pet insurance, slightly less rate sensitive than what I used to have. So as I'm thinking about the portfolio additions, it's got to beat out the return requirements, the quality requirements, and valuation requirements from within the portfolio. So it's an evolution. Sometimes it can be a full-fledged replacement of an existing name. Sometimes it will sort of evolve and develop into a full rate over time.
Sorry about that. I was in the, I always tend to find the title of each interview as we're doing it. So I always like to take a second to write it down before I forget, of course. So, I had to take a second.
I'm just curious, what was the title?
Well, I'm thinking for this one, it's a concentration, compounding, and special situations, because from what I'm hearing when it comes to your approach, it's really disciplined. That's not to say everybody who I haven't had on here has a very disciplined approach. It's more often, this is like you would think everybody was in the military with everybody who I've interviewed on here with how disciplined they are with their investment processes. But with yours in particular, I also have your presentation pulled up, and it's very much, this is how it is. That's not to say it doesn't provide room for creative ideas that you might look at for potential investment. But like once you zone in on that idea, it's here we go. This is the action. So that's why that's what I was pulling from it.
Yeah, and the diligence work up front takes weeks, months. I know I was interested in something that I saw on your podcast where you said within the next couple of weeks you're going to have something to do with Australia. I am very, very curious about that. One of the names I'm actually working on is an Australian name. I don't want to discuss the name, but it's a fantastic market. There are two such specific issues that I would be interested in. I'm gathering data, and I'm really happy that you're going to be presenting something within Australia. They've got the superannuation tailwind, which is the pension fund within the country, essentially converting what is a defined benefit into a defined contribution kind of a program. I told you I worked for an insurance company in the mid-90s before B-School. I was an accountant, sort of a traveling controller for that insurance company, where we were actually setting up offices around the world. Principal Financial Group is the name of the company that I was working for. I don't know if you know Principal. They are the largest 401k provider within the United States. So the objective at that time was for Principal to kind of replicate that in many different parts of the world. And I set up offices in Indonesia, Hong Kong. Later on, ended up in Argentina as well. But in that process, one of the important lessons was certain countries were able to manage pension pool for the overall benefit of not just the population but also infrastructure. Singapore and Chile are the two countries that come to mind. But there has been a long gap post those two countries in terms of true pension power. And I do see two countries that kind of have taken on that lead. One is Australia with its superannuation. The other one is in its earlier stages, but I do see some positive trends in Poland.
Interesting. So here, let me ask you one more question regarding your strategy and this idea of looking at global opportunities.
Yep.
Is this because of your background that you're like, you know what, I have so much exposure to just around the world, to seeing different things in different parts of the world? Is that what has helped you say, I'm not just going to, I'm in the US right now and there's plenty of US and North American opportunities, but, I know there's also plenty of stuff outside the US and Canada. Is that part of your thought process?
Yeah, Bobby, as you were speaking, you kind of cut out, but I got the gist of the question. Question was, how is it that you're thinking about non-US Canada opportunities? Is that correct?
Yes. Yeah. Well, I was saying with your background, being a global citizen, basically, having lived in so many different parts of the world, and your mind is open to things and opportunities outside. Even though you're in the U.S., you have an infrastructure in place to look at stuff outside the U.S. and Canada and evaluate whether or not there are good investments.
Yeah. So early on, I sort of I sort of knew that whatever platform that I set up will have a global approach. And as I said, partly it's because of my immigrant status. I am an American citizen, but I've seen, for example, if I were to ask you, name the top two fastest growing countries in the world over the last 30 years. Take a wild guess.
India.
It's actually South Korea and Poland.
Interesting.
Yes. Yeah. And
was I off? Was I too off with India? Because I mean, it's been. I mean, from my understanding, it's growing very fast.
India is growing now, but over the last 30 years, Poland has been growing approximately at about 4%. Until this COVID hit, they've actually really not had a recession, just like Australia. But although Australia's growth rate has been slightly lower, so that's it's an interesting statistic, right? And about India, I mean, the fastest growing pool of billionaires in the world is actually India right now. I'm not invested in India. I'm looking at that market, but but when it comes to investing in the public market, which is all I do, I don't invest in private businesses. We can see, and my objective is to be able to continue to look around the corner. Looking around the corner is not easy. I'm not going to be right all the time, but I need to continue to look around the corner. And so the desire for businesses, which is essentially human beings, entrepreneurs setting up their businesses, desire to kind of create wealth with whatever business it is that they're involved in. It's global. It's not just America-centric. It's kind of fascinating, right? When I came to the U.S., India was still a socialist country, and there were many challenges. There were quotas that sort of restricted me from moving up through certain channels. Of course, there were a lot of, unfortunately, a lot of, poor people in the country that the administrations were trying to sort of, lift up. And so they had to institute certain quotas, and which meant it impacted people like me. So a whole bunch of my friends, we all left. Most of us, we came to the United States. Some of us went to UK. But we left and we decided to stay back. This is still by far the best country ever. Interestingly enough, the next 15 plus years later, I do see my own relatives, either kids of my cousins or kids of my friends. They come here, get educated, and they're now going back. And so what's now happening is within a socialist platform, India is a democratic system, but it still operates with a heavy tinge of socialism. People are getting educated from the Western world, and they're going back to set up their own operations. They're not perfect. You're not going to get the same kind of, same kind of treatment that you get in the U.S. I have to be a lot more careful. Financials that are audited by Ernst & Young or Deloitte is absolutely, acceptable for me at this point. The same sort of a financial statement audited by a local auditor, will raise a number of different questions. So from those angles, I need to be careful. But the fact remains that there is a big chunk of talent that has continued to go back. Not just India. You see the same thing in China. They call them the turtles that have come back. You see that in many countries that are kind of moving up the ladder. And in fact, in my last, I would like to continue this tradition of sharing a book with my investors along with my year-end letter. Last year, I gave them a copy of this book called Factfulness. Great book by one Mr. Dr. Hans Rosling. He's a Swedish doctor. He actually got his medical degree from India. I was very surprised. Spent a lot of time in Africa, and he came to fame through his 20-minute presentation on TED Talks back in 2006 or 7. A phenomenal presentation. Again, I would highly recommend that as well. But this book, it talks about how our perception of reality is different from reality, and reality being a lot better than our perception. It's a phenomenal book. It talks about education. It talks about fertility rate. It talks about economic progress. So it's a great book, and it's all a long-winded way of saying that there are plenty of opportunities outside of the United States. Currently, as you very well know, particularly over the last 3, 4, 5 years now, we've had a good run in the U.S. Stock market, particularly the last couple of years have been driven mostly by these big tech, and as a result, S&P, is it S&P 5 or S&P 500, which is driving the returns. And so, the similar kind of businesses are available in different markets at definitely much better valuation. So that's another reason why I kind of keep an open eye towards opportunities from outside the U.S.
Very good, Shree. All right, so I'd like to close out our interview today with, I'd love to get an anecdote or a story out of you. So, what investing experience would you say has impacted you the most in your career?
Yeah, so that's a great question. I'd say the following. Yeah, thanks to Mr. David Heller, the late Mr. David Heller, he founded Advisory Research, took me under his wings, and the chairman, Mr. Brian O'Brien, they taught me a lot about investing, about the business of investing. And David Heller, his style, his teachings were very clear. This is going back to the mid-2000s, early to mid-2000s. It was very clear. Go find a cheap stock and then tell me what the business is, and we'll make a decision as to whether it's interesting enough. I'm just simplifying the process. So that was the order. Valuation first, and then the nature of the business next. What I've observed from my own, life is all about, particularly in our business of investing, we have to constantly think about evolving. And one major switch I made in that process is flip that order. I now ask, first and foremost, quality of the business. That has to really meet my threshold from a variety of different angles. And I start with quality before I get down to valuation. And by that, I'm not necessarily saying I'm looking for similar type of cheap single-digit PE or low price to book, low EV to EBITDA kind of multiples, willing to pay a fair price, but it's got to meet phenomenal return and reinvestment threshold. So it's a long answer to a very simple question, but that lesson, lit a really big light bulb. And since then, the type of businesses that I've started looking at has evolved tremendously. That's partly another reason why I have started looking globally.
Very good. Well, Shree, we're there. So where can my audience go and find more information about you and SVN Capital?
Couple of places. Website is svncapital.com. I'm also on Twitter. Twitter handle is also SVN Capital. But Bobby, thanks a lot for having me on your fantastic platform. I see some great names. Good luck to you. Certainly looking forward to listening to your Australia presentation. And I would love to circle back with you personally after that to learn a little bit more.
Absolutely. Well, Shree, thank you so much for joining me. I really do appreciate it. Good luck. Stay safe. And you'll be coming back. We'll see you on here again. That's for sure. All right.
Absolutely. Thank you. Thanks for having me.
Thank you. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.